this key area of resistance, and it was an overlap. Price broke above, then it came back down below, back into this area. What I want to pay attention to now that I see this overlap, there are a few things that could take place, and I'm going to be patient until one of those play out. Price could potentially still go bullish here. This could have been a breakout retest holding as support, and this could be that consolidation breakout. And price continues to go up to the upside, up into the highs. The bearish scenario is price maintains below this 1 hour resistance. And if it does maintain below here, then sells will be valid down first into these lows, down into these lows, and then down into my main 1 hour zone. What confusion would look like is picking one side. What clarity looks like is reacting to what the market gives me. If I take sales, stops will be above this range. If sales are taken and I do get stopped out and price starts maintaining as support, I will then take buys to target the highs and then up into 4 hour resistance. That's why if I take a sell position, my stop loss has to be in an area that would invalidate this setup. A stop above here would invalidate this because this would be a breaker structure. High, lower high, lower low, lower high, lower low. A break above here would be a break of structure, which would then higher low form, and at that point in time, I would wait for that confirmation higher low for the buys. Consolidation does not mean confusion. Consolidation means opportunity. I look at consolidating markets as the best opportunities for me to level up mentally and obedience wise. The challenging times where I truly get that level up and I truly hone in my skills is when the market does not look clean. I don't steer away from those. I use that to hone my skills, hone my craft. When clear buys nor clear sells are clearly valid, this is where I hone in my skills. A thought just popped in my mind. I understand why I was using so many tools in the past, always pulling out Fibonacci's, moving averages, trend lines. For me, those tools weren't to benefit my system. It was to benefit my pride because I would add those tools just for extra confirmation on a fixed bias that I already had. If I was so focused on sales, I would just pull out a Fibonacci anywhere that would confirm those sells, or just pull out a trend line that would confirm those sells to try to give me more. And I thought, and I was using that as a way to give me more confluence. And when I rebuilt my system and I use the word as my foundation, number one, God is not the author of confusion. All those things that brought that uncertainty and that unclarity, I removed it. I know I don't need those tools to trade. I can use my eyes. Trend lines are not needed. Fibonacci's are not needed. Patience is the key factor. Is price going to maintain above here? Or is price going to break back below? Price is going to do either one of the two. Whichever one that it does, I will react to it. So watching these candlesticks, there's truly no, I don't feel any anxiety. I don't feel any fear. I don't feel any eagerness. I'm truly just calm and observing the market and the ability to be able to adjust and adapt because I keep my mind fixated on reacting, not trying to be right, just being on the side of the trade that the market is heading to, whether that's up or down, and having scenarios in my mind constantly of both. If I'm looking for sales, I immediately also take into account what would invalidate that sell. There's my confirmation. Taking sells. This for now. What I've observed, I was looking at that 5 minute time frame, seeing how price came back, broke above, and then the 5 minute engulfed a bearish engulfing. This candle closed and engulfed the body, the low of this body. A bearish engulfing on the 5 minute time frame at an area of resistance after the overlap has already formed. This is classified as a break and retest. This price broke below, came back up and retested this area, maintained below this entire zone, maintained below this area, gave a bearish engulfing, and for me, sells are invalid. What would invalidate this setup is if price starts breaking back above this resistance. If price breaks above these highs, breaks above this resistance, then I will get out of the trade and I will look to see if the market flips back bullish. Then I would take those buys there and then move my stop loss below. If price breaks above resistance, I would look for the buying opportunities, take buys in this area. If the market gives me an opportunity, it have my stop loss below this area. This current position, going to monitor it on the 5 minute time frame, let the time go by, focus only on candle closures, and I'm going to, while I'm right here, set alerts on right here, and I will set I'm gonna move this one up. I'm gonna set another alert near the highs. One of my foundations of my system is my strategy must stay calm when the market is moving aggressively like this. So if I had those heightened emotions, I would identify that. My system, it automatically combats for that. With this huge drop that happened, there is no clear structure point. Go to the actual charts. There's no clear structure point for me to put my stop loss. And what I do is, if prices are dropping aggressively, I just trail my stop loss. For me, I'm just going to, with this huge drop, entries is up here, I'm going to have my stop loss above this candle. Price broke back above that area that I was looking at. So I will close the positions, no longer end the trade, just close.